Well, good morning, everyone. Welcome to our Wednesday morning open house trading room. Let me see here. Let me get you my monitor so you can see what's going on. Now, I've had requests to change the format of the trading room to be a little bit more like our regular room, so that's what I'm going to do. Just a moment here. I'm going to get you a link because some of you are going to find some of these things confusing, especially if you haven't seen this stuff before. You can get more information about everything that you see here today right there at that link that I just sent you. Okay, so what you're looking at here is the diversified trading system and the Raptor. So here it's diversified because we're looking at the market from three different points of view. Here in the top left, I have my Hawk Scalper. Top right, I have my Falcon Swing Trader. Bottom left, I have the Eagle Trend Trader. And here on the bottom right, I have the Raptor. This monitor, I'm watching the NASDAQ. On my other monitor, I'm watching the E-mini and crude oil. But I could take a look at any market which is of interest to you. Okay, a rather soft open for the most part. So far anyways, let's take a look at what's been going on in the overnight. And not a whole lot. This is like yesterday too. We had such a quiet overnight session. This is all that we had. Let me just make sure. Yep, that's it. Very, very sluggish overnight, which is a little bit unusual. I suppose not so unusual given the current market conditions, world events, reports, and so on. I think we're actually, are we expecting a report today? Besides the crude inventory, I know is out later. Now, sometimes we'll get a signal right out of the gate here. I'm not usually a fan of taking an early signal right out of the open, but we'll see what gives here in a moment. All right. We are getting a little bit of a trend change signal here. Okay, we're beating up against the hard edge here on our Eagle. And we're coming out of swing mode according to our trade forecaster and going into trend mode in about 2 minutes time. So we'll see whether or not that's actually going to result in some sort of trend. We know that whenever the market hits the hard edge of this band, we can anticipate some sort of reaction. The band is just flipping over now. And of course, what I'm really interested in seeing is a test of the extreme, right? I'd like to see the market retest these highs and then fail and head lower. That's what I'm on the lookout for right now. Just some very, very wild swings, especially in the NASDAQ of late. And as usual, the NASDAQ and the stock market seems to be at odds. Here's the E-mini S&P on our Eagle, and you can see the E-mini looking a little bit smoother. And according to our trade forecaster, the NASDAQ said it was about to enter a trend mode, and the E-mini says, well, as far as the E-mini is concerned, it's going to go into a scalp mode. So we'll see how well that holds true. is asking about the US dollar. Let's see if I can get the US dollar in my assortment while we're waiting. You're referring to the US dollar index, Lee? Oh, the 30-year bonds. Of course, that I can do for you. Okay, let's take a look at the 30-year bond. And you'll have to ignore those lines there. I don't know why that's printing like it is, but I'm not going to fix it right now. Yeah, the bond's actually mimicking what's going on in the stock market, and that's a little bit odd, isn't it? Normally we don't see that. Normally we see the bonds moving opposite the stock market. A lot of times I like to follow the bonds as a confirmation tool. Not always to trade, but just to see what the bond traders are seeing. They say the bond traders are the smartest traders in the world, so I figure if they can't be fooled, then I'm probably in pretty good shape. So that was the bonds on the Eagle. Here's the bonds on the Hawk Scalper. We had a little red bar buy signal here, and it looks like they're going up to test the extreme, which is pretty handy. If it fails, if they fail and turn here, then we can probably anticipate a sell below this red bar buy signal. The Hawk red bar buy signal is actually also a counter trend signal for us. This very nice first micro macro cross signal here on the Hawk. And earlier in the session here to the upside, a nice little first micro macro cross scalp. So no signal currently in the 30-year bond. David's asking, what time zone am I in? Pacific, David. I'm on the West Coast, so these numbers you see here, these are all Pacific time. Thanks, Jim. Jim's always giving me the advanced decline numbers. So right now we're 1,500 positive, 1,100 negative. So we're about 400 to the good. That means that as far as the New York Stock Exchange is concerned, there are more buyers than sellers at the moment. So we'll see if that puts a little bit of a bullish spin onto the market today. All right, here comes the Eagle. I'm getting a warning dot and a possible red bar buy. This does tend to be a fairly reliable signal for the Eagle. I would definitely risk it below the swing low here, and because it's still early, I think I may just go in with a onesie. Just throw it in like that. I could even possibly risk it below the other swing low, but you know what? That's probably good enough. The bar hasn't finished printing yet. I'm kind of anticipating that this signal will print. Okay, we're getting a first micro-macro cross now on the E-mini. I haven't really seen a test of the extreme here either, and this is a little bit odd. All right, let's see what this one's going to cost to be wrong. If I take it, I could take it below the low, cover it above the swing here. I know a first micro-macro cross is a reliable signal. However, I do like to see it. I do like to see my test of the extreme first, and it's a little difficult to judge at the moment if we've had it, but we'll set that one up. We're essentially testing the trend line support here, see what kind of buyers we have. We're also into the hard edge on our eagle, right? I'm going to show you the hard edge here on the eagle, and like I said, we normally anticipate some sort of reaction as we get there. So we're into the hard edge, and we'll see whether or not they slip through there enough to actually give us our profit target. And it looks like the NASDAQ is folding over here, so I'm going to cancel this order. That was also on our eagle. And our raptor, giving us a with trend change signal. Now here too, I've got the same sort of problem as I was looking at in the other charts, namely that I don't have a real good test of the extreme. But it is our first signal, and that does tend to be a little bit more reliable. So let's see, we've got an opportunity to cover above the highs here. And what I'll do is I'm going to dial back my stop just a bit, just to try to hold in above that swing high there. Like I said, what I'm concerned about is a possible test of the extreme to the upside. That could be bad. That'll give me a visual to follow. All right. Come on now. Come on, you sellers. Don't walk away just yet. Lee is asking, do I watch the ticks? Sometimes. There's certainly nothing wrong with watching the ticks. For those of you not familiar with the ticks shows you the number of markets upticking and downticking at any given time. Again, it's off the New York Stock Exchange. The reasoning is that it will show you a perhaps a directional bias, or if the market becomes lopsided or overbought, oversold. I know Mike Filigera really likes watching the ticks. My criteria is always the same. If it helps you make a decision, then use it. If it doesn't help you make a decision, then you don't need it. These tools have been specifically designed so that you can trade without them, without that other information. David's saying at some point I'd love to see crude oil on the Raptor. Okay, hold on, maybe I can build you a crude oil chart while we're doing that. And Dustin says his Raptor isn't showing that particular signal. Well, you might have been in luck there, Dustin, because right now they're taking a run here at our stops. Is it quarter to the hour? Doggone it, it is too. Quarter to the hour is when I always seem to get a sucker signal. I normally pay attention to my clock, and if I get a signal at quarter to the hour, I do tend to avoid it. To answer your question, though, Dustin, here we'll just go through the settings. I'm assuming that you have all the default settings, 12 ticks on your cloud, 12 ticks on your filter, and 6 ticks on your brick size. If that's the case, then it may just be, I'll check my data series in a second. It may be the data series. I may have a few more days loaded than you. Now on this chart I only have 10, but I have a feeling that I might have 30 on the other one. If there's a problem with range style bars, it all depends on what tick you start at. Unlike a time chart where everything starts at the top of the hour all the time, with a range chart, if our charts start, even 1 or 2 ticks different, they might generate signals just slightly differently. Now, normally that isn't an issue. Okay, here is crude oil on the Raptor. We did get a signal right here, and that was actually a comparable signal that we saw on the Hawk and the Falcon. I was watching that, and I'm sorry I didn't take it, because look at that nice decline in crude oil. Of course, that means that we're all going to see lower prices at the pumps again. I don't know about where it is where you live, but the scoundrels with the market waffling a little bit, they jacked the fuel prices 7 cents a liter yesterday. Oh my gosh, that's like another 25, 30 cents a gallon. Just like that, just because they wanted to. You can see here the Raptor very, very choppy when you're getting all these yellow bars through here. That's telling you you've got a choppy market, and your filter keeps breaking up. Not really a market you want to participate in. But when you generate a signal near the top or bottom of this choppiness, so let's say you identify the choppiness like that, then we come and generate a signal here, these tend to be fairly reliable. And I think that one actually had pretty good follow through to it. Yep, not bad. All right. See, we're getting some of these yellow bars coming in. And our falcon is starting to change color here. That's not what I want to see. Here come the sellers, though. This is on our Raptor trade. This is the last chance that the sellers have to recover this market. Hopefully we'll see them press lower from here and challenge the lows. Stephen's asking, Steve says, can we see other questions? I'm sorry, Steve, no. I don't know why GoToWebinar does that, but I cannot enable you to see the questions. And I don't know why they do that. Yeah, they give me every option but. Sorry. That's why I tend to read out the questions. Lee asked, at what price would it affect the market? I think you're asking about the crude oil comment about lower prices at the pumps. It's very unlikely that the price that you're paying at the pump has anything to do with the market itself. I know that sounds strange, and yet it's true. It's like they use whatever excuse they can to raise prices. And I'm not just picking on the oil industry. This is true for any industry. All right, let's watch the action here. All right, so we hit our first profit objective with our E-mini Hawk trade. They finally found our profit target after a little bit of waffling. And here we are back at the NQ. So we're seeing a little bit of buying pressure here. And in fact, what I should do is I should probably roll my stop in a little bit more aggressively. But I'm going to try to give these guys a chance. The big deal here, of course, is 44.38. We need to see somebody take 44.38 because we have got a whole bucket full of buyers down here. And guess where their sell stops are? Their exit orders. Yep, you got it. They're right there. If we can see somebody take 44.38, this is going to be like a house of cards. This is going to start unraveling pretty quick. Yeah, Dustin says where he lives, they're up over 50 cents a gallon in the last month. I know. Ah, see, and Stephen's got a carbon tax in California. Yeah, they thought that was a good idea here too. July 1st, Canada Day. Every year to celebrate Canada Day, we get a 3 cent per liter carbon tax added to our fuel purchases. Isn't that nice? Okay, we're hitting a little bit of sideways action. Come on, sellers. I'm not liking that they're holding these lows. Jim says, carbon tax. Aren't humans carbon? Yeah, I suppose so. Okay, Lee's asking, I really mean, at what price would crude have to fall for low crude price to affect the market? It's You know, it's really hard to say, Lee, because they look at other things for setting gas prices, right? It normally depends on a little bit on demand, also on how much the refineries are supplying. If they really wanted to keep oil or gasoline prices up, all they have to do is shut down a refinery. But to answer your question, if crude went down, say, to 45 a barrel again, I think the oil companies would have a very difficult time justifying keeping the prices up at the pumps. And it's not that crude oil prices rallied significantly. I think what did they get up to, 51, 52 a gallon? Or a barrel, I mean? And currently they're trading at 49. But they're looking at all this volatility and they're saying, oh, the market is volatile. We have to protect ourselves. All right, here come the buyers. You guys are a bunch of comedians. Steve says, just don't exhale. Yes, we don't want to raise CO2 levels any. All right, come on, sellers. See, we have a real bit of a tug of war with the market, right? We have all the sellers hiding up here, and we have all the buyers hiding down here. So it looks like 44, 45 is a bit of an obstacle to the upside. That's where the sellers are piling on. And the buyers are digging in at 44.38. I'm trying to give this market a reasonable amount of room to sort itself out, but if we take 44.45, we are going to be in a little bit of trouble. Yeah, there we go, 44.45. Somebody knock this market down. Here, we'll pull it down with our mouse. Not much else going on this morning, though. See our hawk very much sideways. We're getting all these yellow bars again. So no real scalp trades right now. Our Falcon trying to turn over with an early trend change signal. So our Falcon and our Raptor currently at odds with each other. We'll see if I can get a second push on this entry here. And what I'm looking for with the second push entry is I'm just looking for this bar to come down a little bit. And what that would do is it would show me renewed momentum on the part of the buyers. Nice thing about this type of trade is that I can cover it below the swing low here. And in fact, what I think I would do is I would dial down the risk somewhat. Just because the market is the way it is today. There we go. Now we're flashing a red bar. So I have a pretty good idea. In fact, what I'll do is I'll take it up another tick higher. And I'll go with the swing low. All right, so here they go. Now they might actually try to rally up here to our primary resistance line on our support and resistance assortment. We'll see how they go once they get up here. Oh yeah, you see they're really knocking the sellers down now. Did you notice how that bar took a little bit of a bounce to the upside? So I might try to use our primary resistance line as a profit objective. 44.50 is going to be a little bit of an obstacle. I think that was our first profit target, actually. Let's see, 44.50. Yeah, 44.50 quarter was, half. That was our first profit target. And all they're doing now is the sellers are trying to regain the market, right? We broke through here. Sellers are struggling. They're trying to get the market back. It might develop into a trend line touch signal for us. There they go. Come on, give me that nice long tail on this bar. That would be a great bar to roll my stop below. Oh, I got a couple comments here about the news story at the top of the hour. Honestly, you guys, I am woefully ignorant of most trading reports or news stories. I usually just trade what I see on the chart. Now, oftentimes I can tell if there's a news story or an FOMC or a grain report or some significant report affecting the market because it's just abnormally quiet, right? Like this was the whole overnight session, and this was the market out of the open. It was just abnormally quiet, so I had a feeling there might have been some sort of report or something due, and I think I might even mention that in passing. But no, I don't really pay much attention to the reports. Yeah, thanks, Lee. Lee says crude reports out today at 7:30. That one I know. Lee's also asking if you want to have less risk, can you change the size of the mean Renkos? Yes, you can, but it's easier to control your risk right here, just to dial down your risk amount right there. This only allows me to risk 1% of my account, or whatever I dial it in at. Generally speaking, anything less than 5% or less is considered prudent money management. The last thing you want to do is you don't want to strangle your trade, right? You don't want to make your trade so tight that if you get into a trade, let's say you took this buy signal here, that if you get into a trade, and let's say you covered it right there, you get into a trade and the trade immediately moves against you a little bit, you get stopped out only to watch the market go on without you. That's what you don't want. So how do you run a decent stop? Well, you control your risk amount. Muy importante. That's something that a lot of people don't get a handle on, is you have to control your risk. All right, we're getting flashes of buying opportunities across the board now. Let's see what, this is our hawk scalper on the NQ, also giving us a first micro macro cross signal. very similar to what we're looking at in the Falcon. Oh, now this is pulling back into a macro pullback signal, and I do not like the way this one is unfolding either. Wow, ton o' chop this morning. What's with that? All right, let's go here to the this is the E-mini. Once again, the E-mini at odds with the NASDAQ, but we're getting a late filter entry signal here, or the beginnings of a late filter entry signal. This tends to be a pretty reliable signal with the Falcon tool, and I could even risk it below, or to enter below the recent low. And let's see if I dial my stops back a bit. I kind of like that. So I could take it at the low, cover it above the swing high. What I'm going to do is I'm going to dial down my risk amount on this one, and we'll try that again. Yeah, that's a little better. So I'm just getting the warning dots. I don't have the signal printing just yet, but I can anticipate where the signal will print. Still haven't seen a real good test of the extreme. That bothers me. All right, so we'll come back to that. We'll keep an eye on that one. Oh, here's our NQ trade. So the buyers stepped up. That's good news. This is a trend line touch signal. We'll see if that develops into a little bit of momentum to the upside. 44.48, a little bit of a problem. Jim says we're beating up the 10 o'clock highs at 44.46. I think that's where the market gave me a... oh yeah, that's where we were with our Raptor trade. Come on, get above there. I know you can do 44.50. Now we'll help you up. We'll give you a little bit of a push. There you go. There you go. Okay, our E-mini trade, or not trade, but setup, is not completing. We're into yellow bars now, so I'm going to clear that. We'll put that away. Just a little bit more selling pressure as we take out this high, a little bit of selling pressure here. Almost time to get this trade to break even. Let's see what our parabolics looking like. Maybe I'll take the parabolics. I can always roll my stop back if I have to. Come on. I know, isn't it weird how we root for our trades? Oh dear. Oh, here is the first micro macro cross while I was looking elsewhere. I had my first micro macro cross signal. Doggone it. I would have liked to have taken that one. Oh well. Oh, you scoundrels. Look at that. There's no follow-through one way or the other today. Crude oil also moving a little bit sideways now with the inventory report out at the bottom of the hour. If we get a little bit of a channel forming here, I might try using my OCO order, bracketing the channel and letting the market fill me on whatever side it wants to break out on. They shouldn't have to be working this hard on our NQ trade to get us to where we want to go. There we go. Come on. It's very neutral today. It's kind of been like this for a lot of February, hasn't it? Just kind of waffling a little bit. Lee's watching the ticks. He says they haven't hit an extreme either way, so that pretty much goes along with what we're seeing this morning, doesn't it? They're just kind of flat. I'm trying not to get too anxious with this trade, but I tell you, I'm not real happy about them taking their time like this. Only an extra point. Is that too much to ask? Well, maybe it might be. Here we go. Oh, still. We've hit 44, 49 a couple of times now, and it just keeps backing off. Ooh. Julie says the crude trading below value, an inventory report coming out in 15 minutes, should be a bloodbath. Well, who could resist trading a bloodbath? We'll keep an eye on that. Like I said, a lot of times if there's a defined channel, I will bracket the trading range. So it looks like right now our primary support, this is on our support and resistance suite, these lines that you see here. Right now the primary support is holding and the median line is holding. Very interesting. Of course, the thing with crude inventory reports, crude being crude, it is not beyond crude oil to give us a fake break. Yeah, like Julie just said, they do it the opposite a lot of the time. Yes, they certainly do. I know a fellow who likes to wait a minute or two after the inventory report comes out, and then he'll identify a range, and then he'll place his trade. We tried both scenarios last week. Mine worked out a little bit better, but I don't know, maybe his makes a little bit more sense on a gut level. Jim, which tool are you trading, Jim? Jim says, I hate when I hear long setup when I'm already long. Which one is that on? Is that on the Raptor? I had the same problem, and what I did was I changed my audio settings. So if you go to your indicator and you go to your tool, you can choose from different audio warnings. See, like these, like scalp long setup. This would be for your hawk, of course. I don't use those. I just use the basic scalp and swing and trend and so on. I find it less annoying. And here comes the NQ backing up again. Wow, they just do not want to cooperate this morning. Well, thank goodness we had that RE mini trade work out. Now I've got the parabolics in here, and the parabolics are a little bit more aggressive as far as the stop strategy goes. I may give this just one more bar to cooperate, so I may roll my stop back just a couple of ticks. Obviously the better stop placement is below this swing. Julie's asking about the mean wrinkle bars. The mean wrinkle bars, these are unique to Indicator Warehouse. The link that I sent you guys earlier, in case you didn't get it. Oop, wait a sec, where did that link go? I'll get it for you again. The mean wrinkle bars have been designed specifically for the DTS system, but that doesn't mean that you can't use them on other systems. The thing I like about the mean wrinkle bars is that they give you all the power of a range Renko style bar, and they combine it with the sensitivity of a candlestick. So you're quite literally getting the best of both worlds. And I think, Julie, you asked me earlier if there was a bit of an adjustment period getting used to these. Well, I was a 5-minute chart trader. And that's when I was day trading, I was only watching a 5-minute chart. So that was my stock and trade. And it really did not take me very long. I was reluctant to use them. And of course, I had to use them for the DTS system. And after using them for a week, I said to Adam, I wouldn't go back to a 5-minute chart. They really show me where the buyers are at, where the sellers are at, who is controlling the market at the moment. Like, I think they're fantastic. The only bad thing about them is the name. I think they came up with a terrible name for them. Mean Renko bars. They sound very angry. Now the bars themselves are, we have on the Hawk, our default setting is 6 ticks, the Falcon is 8 ticks, and the Eagle is 12 ticks. That is the body of the bar. The tail or the wick can be another up to 7 ticks. So you got one like down here, which was probably just a tick shy of forming as a red bar and then reversed and became a green bar. So this one probably from tip to tail is probably 12, 15 ticks, something like that. Yeah, David's got a good name. Let's call them the Happy Renko bars. I like that. Oh, and here comes the NQ again. Doggone it, what happened to all our buyers? Well, the sellers are knocking them down. Huh. Jim says the advanced decline is to the good. We're about 300 to the good, so you would think that would have some follow through, but we're not seeing it. Very quiet so far, except for crude oil, which is in a little bit of an early tailspin, and they've spoiled my nice channel formation that I was looking at. So they've got about another 5 minutes to trade back here to around 49.10 and give us a nice even channel that we can bracket. Some early selling going on. Yeah, Dustin's asking about the Raptor signals. Dustin, I'm actually putting together a Raptor cheat sheet, and I'm probably going to be working on that a lot this weekend, hopefully to get you that information so that you can tell which signals are going to be the stronger signals. For instance, we have cheat sheets for the Hawk, and I'm making cheat sheets for the other markets. And if you haven't seen it already, this is what the cheat sheet looks like. It's just an explanation of the Hawk signals and essentially the 5 signals that we look for. We kind of disregard the other signals and we pay most attention to these signals. So that's a cheat sheet. And yes, I'm working on cheat sheets for the Falcon, Eagle, and Raptor also. Boy, we're sure sweating this Falcon trade. It's making me a little reluctant to try to get into a hawk trade or even the other raptor trade, but we'll see. Right now I'm holding out for a possible trade on crude oil, and we'll see how that plays out here in a moment. Okay, crude oil trying to get back to somewhere in the middle. Look at that. Every time they get up anywhere near 49, they start getting knocked down again. Get up there. Come on. I don't have all day. Let's go. You know you want to. I don't know why they're waiting. All right. Here they come. Okay, we're getting all these double dots forming. This is not encouraging. These double dot signals do have a tendency to show us some weakness in the Falcon. And the fact that they're waffling so much is not what I want to see. Okay, crude inventory coming up. I better hurry. So here's the Falcon. I'm going to use my OCO. I'm going to place a buy above here. Where's my buy order? I'm going to place a sell below here. And we're about in the middle. And this, of course, is a insane market. So don't be surprised if we see some fake breakout. All right, there we go. This is actually a late filter entry signal also here to the downside. Our filter went out of sync, came back into sync. That does tend to be a fairly reliable signal to the short side. All right, here they are. They're beating up on the, oh, just held in by a hair as they almost tried to run our stop. Come on, get on down there, crude. Come on. So here was the bottom end of that range that we were looking at. And look at that slippage. Ain't that crazy? Yeah, that's the problem with crude. I should have gone in with a stop or a stop limit order. Wouldn't have got filled, but I wouldn't have had that insane slippage either. All right, now we'll see my friend's strategy. He likes to wait a couple of minutes after the inventory. So we're about a minute into the crude inventory. And there we go. So we'll give it another minute. They're challenging the top end. We did get a trend change signal here. This is all unfolding rather quickly. And we also had a first micro-macro cross signal that I was just going to point out when it triggered already. So here's that first micro-macro cross signal right here. All right, so we're only a minute in. Come on, you got to knock them down. We know the bottom end of the range now. Oh, are you going to give me a trend line touch signal? Not even going to do that. Wow, crazy, crazy move. Here we go. So this area here around 49.30 is going to be a little bit of an obstacle for us. But we'll see if we get enough room here that we might actually be able to realize a profit. Let's take a look at our hawk. We're working on a macro pullback signal. Oh, you guys, he just ran away on me. All right, well, let's put that away. Let's see. Oh, the stinkers. They did drift low enough to tag my stop. That's the problem with the parabolic. It is a little bit more aggressive, but look, they're back up here to 49, getting knocked down yet again. Oh, here we go. Now we're getting a crude signal I can get interested in. Here's a late filter entry signal to the upside. Here we go. Now, the nice thing about the late filter entry signal, besides being fairly reliable, is that it's pretty easy to spot. The trend line does not change color. The filter goes out of sync, comes back into sync. That's our late filter entry signal, and that does tend to be a pretty reliable signal for the most part. Obviously, these highs here, they're sitting around 49.20, going to be a major obstacle as we try to push to 49.30. Here too, we haven't really seen a test of the extreme to the downside, so I might choose to be a little bit more aggressive with my stop, right? This is what we normally anticipate. We normally anticipate a good test of the extreme, and then the market heads higher on that failure. I could have postponed my entry to the other side of this high, but that would, well, actually it would only mean giving up another couple, 3 ticks, which isn't a big deal. It's problematic sometimes when you have to give up 4 or 5 ticks. And in fact, if I get a chance here, I'm going to try to adjust my entry a little bit better. Take it on the hash mark. All right. Gets me a little bit closer to my 49.30. All right, so what is that? 737. There you go. Who's your daddy now? That's the way it's done. Okay, a late filter entry signal. One of my favorites. And that's in the Falcon. Definitely a signal worth holding out for. Oh, and a nice little burst higher as well. That's all right. I'm okay with my profit. Yeah, I should have put the crude oil market on the main screen because that's the one that was performing today. The NQ, not so much. Steve says, crude is crazy. Inventory twice the expectation. So a big rally? Really? Yeah, that's why I don't pay much attention to the reports or minutes or inventories. It's enough to be aware, especially in a market like crude. I agree. You have to be aware that there is a report coming out because the market is going to get a little on the volatile side, to say the least. But, at the end of the day, it's all about the signal, right? If I see a late filter entry signal, something that I know is a high probability signal, I want to get in there. I want to take it. Even pre-report or even during the report, didn't we have, or a late filter entry signal was trying to develop? But even here, crude inventory about 45 minutes into trading gave us a nice little trend change signal to the downside, kind of queued everything up for moving lower. Yeah, we're always on the outside looking in when it comes to things like reports. Reports all depend on market perception, not on the actual figures. So in the case of crude, the market was obviously bearish going into the report, and yet the report itself on the surface is bearish, saying that, there's lots of inventory, no shortages, and yet prices rally. Well, why do they rally? Well, because the report was not as bearish as the market was expecting. The market was expecting even more inventory than what was reported. And how do I know that? Well, prices went up, didn't they? That's how you know. So for those of us who are not on the floor, who don't have the ability to be there, who don't have our fingers on the pulse of the oil industry, we have to resort to price and price action as a means to gauge what's actually going on. Yeah, like Lee says, they say the market knows all. Well, it's because, at the end of the day, it's real people putting real money at risk, putting their money where their mouth is, quite literally, saying, yeah, the NASDAQ's going to go higher or crude oil's going to go lower. And this is actually a first micro-macro cross, by the way. I was just about to try to get in on that, and it took a little hop to the upside. Still fighting this whole 44, 49, 50 area. Finally got up there. And this ticks me off. This really does, if this wasn't a G-rated room. The only thing worse to me than taking a losing trade, and admittedly, we didn't take a big hit here, but had I had my stop back a little bit more, I would have, instead of incurring a loss, I would have realized a profit. So for me, people are always asking, Eric, why do you run such big stops? That's why. Because for me, the only thing worse than a losing trade is taking a losing trade that would have been a winning trade. See, and there we are right now. So whereas I took, I don't know what it was, a $50, $60, $70 hit, I could have had a $100 profit. That annoys me. That's worse than a losing trade. That's worse than taking a trade, taking a signal. Let's see if I can find the signal that failed. All our signals are working out. Okay, let's say I took this one here. Let's say I took this sell and the market reverses and stops me out. That is not as annoying to me as having a signal that would have worked if I had just managed my stop a little better. And why? Well, because this signal was a pure signal. I had every reason to take it. Did it actually reach our profit target? No, it came up a little short, gave me a couple opportunities. But this other signal, this was just the market sorting itself out, and I got a little anxious with my stop. That's my own fault. That's going into my journal. Good question here from Lee, and I see your question too, Dustin. I'm going to get to it in just a second. Lee asked, if you have a losing trade, do you have a max number that you allow yourself before taking another trade? It's funny you should say that. We were talking about this just the other day in the trading room. And what I suggest for people is that you have a trading quota. Now, you don't always see me do the trading quota in the trading room because it is a trading room. If I did my trading quota, chances are we would close the room about anywhere from a half an hour to 45 minutes into the session because I would have hit my quota. So what do I mean about a trading quota? Well, trading is more about probabilities than just about anything else. If you want to learn about trading and you're interested in the subject, you should try to learn a little bit about probabilities. And you don't have to be a mathlete. There's simple books on probabilities. Believe me, I am no probability expert. However, I do understand that the more I try to do something, the less likely I am going to be able to accomplish that thing. It's kind of like the law of diminishing return. Not exactly, but similar. So what do I mean by that? Okay, well, let's say you took a coin and you flipped a coin. See how many times in a row you can flip heads. Now, sometimes you won't be able to flip heads to save your life. You'll toss like 4 tails in a row, and other times you'll toss, heads 3 times in a row, and then you'll flip a tail, another 3 heads and 2 tails, and so on. Well, trading is very similar. Trading, you will flip heads 3 times in a row. You'll get your 3 winning trades, and then all of a sudden you'll hit a string of losing trades. So for that reason, I suggest that people have a trading quota. And this is a situation where less is more. The misconception most people have about trading is they think that if they trade more, they will make more money, when in fact the exact opposite is often the case. You don't need to trade more to make more money. What you need to do is you need to focus on your high probability signal, like the late filter entry signal that we took here in crude, or the first micro macro cross signal that we looked at in the E-mini, or even this first micro macro cross here that we're looking at in the NASDAQ. See, we would have hit our profit objective. If you do a signal like that, let's say we did this one here on the NQ, and let's say we made $150. And let's say like our coin toss, we're going to do this 3 times a day. We're going to set ourselves a quota of 3 trades on the day with a positive result. So let's say the first trade we take is a winner and we're up $150. Let's say the next trade we take is a winner and we're up another $100. So now we're up $250. Let's say the third trade we take is a loser and we lose, what am I up, 250? Let's say we lose 400. So now we're 150 in the hole. But we've taken our 3 trades. So we've reached our 3 trade quota, but we have a negative result. We want to finish with a positive result. So in that case, I'm going to take another trade, a 4th trade. Let's say I have another 150 winner. Okay, so now I'm even on the day. So I've got my 3 trade quota, but I still am lacking a positive result. So let's say I take trade number 5, and that one is another $150 winner, and I finish. My day is done. So what that does is it prevents me from over trading, because I'm not going to keep chasing the market now. I've hit my 3 trade limit, and I'm finishing the day with a positive result. Even though it's only $150, it's still $150 that I've earned, not, say, $500 that I've lost if I keep trading. I've mentioned this to you guys before, but I've worked with people who have blown through a $20,000 account in a single session. How do you blow through 20 grand in a single session? Like, it boggles my mind. But you see, here's the real benefit. If you limit your trading, say, to a 2 or 3 trade quota, and you focus on your high probability signals, let's say I took this first micro macro cross, okay, I'm 150 to the good. Let's say I have a 2 trade quota, which is my own personal number, but I think 2 or 3 trades are a great number. Let's say I'll stay with the NASDAQ here for a moment. Let's say I take another $150 winner. Well, all of a sudden I'm up $300. If I go 3 for 3, which is not unusual, well, that's $450. That's not bad. That's just the one tool. That's just on the Hawk scalper. But what I was going to toss in here is this morning I also took that crude oil trade, right? That was a $400 winner. So if I had my 2 trades and I just sat here, for an hour in the morning, hour and a half, and I nailed 2 good trades, I could potentially be looking at, a $400 or $500, maybe even a $600 day for an hour's worth of work without risking too much money and without chasing the market around like a 4-year-old. This is what a lot of people have difficulty with. They think they need to trade more in order to make more money. I'm going to share another example with you really quick, but some of you will have heard me mention this fellow who approached me, I guess it's been a year or so now. He approached me for coaching, for mentoring, and he said, I want to be a scalper. I want you to show me how I can take 100 trades a day. And I said to him, well, I can show you how you can take 100 trades a day, but you won't make money as a scalper. Because but you see, he had that brick and mortar world mindset where if you're in a widget factory and you produce 100 widgets, you're going to make more money than the guy who produces 10 widgets. But that's not how it works in the trading world. In the trading world, it's not the frequency, but it's the quantity. So if you get a high probability signal, like this first micro macro cross, if you can trade 100 contracts, you're going to make more money than the guy who trades 10 contracts. You see, that's where the clout comes in. It's not show me a way I can take 100 trades and I'm going to take a single contract on every single trade. No, that's not how you make money trading. You make money trading by going in with volume on a high probability signal. Or even if you don't go in with volume immediately, let's say you test the waters with a single or you lower your risk percentage. If you have the nerve to press the trade as the market moves higher so that you can increase your position, that's where the money is made. Some of you will have heard me quote this example before, but if you trade, say the NASDAQ here, and you trade just one, let's say you take 2 winning trades a day for $50. That's our high probability target, by the way, for the NASDAQ. $50 per contract. Doesn't sound like a lot of money, does it? Actually, let's do it here on the E-mini because the E-mini has more volume to it. But here was our high probability signal. Our first micro macro cross went down, hit our $50 profit objective. We're happy campers. If I can do that twice a day and I trade 25 contracts each time, I will make $500,000 a year trading. Now let that sink in for just a moment. Actually, we could do that on the NASDAQ too, couldn't we? If I take 2 signals a day on the NQ, and we had 2 signals quite easily here. So there's signal number 1. There's a first micro macro cross. There's signal number 2. We actually had more. We had first micro macro right here after the open. So we had 3 signals here. So let's say we took 2 out of the 3. All 3 were winners, hit our $50 objective. If I traded 25 contracts on 2 of those trades, I would make $500,000 a year. Now, I know you're sitting there saying, well, Eric, I can't afford 25 contracts. Okay. What if you could afford 5 contracts? That's still $100,000 a year. 6 figures, 2 trades a day, $50 per trade. You see how this volume thing works? Okay, you say, Eric, I can't afford 5 contracts. Okay, well, what if you can afford 3? 2 trades a day, 3 contracts, $60,000 a year. I guarantee you there's a lot of people working a lot harder to make their 60 grand a year than picking up 2 high probability trades for $50. Can't trade 3 contracts? What if you're trading 2? That's 40 grand. How would 40 grand, an extra $40,000 a year, impact your lifestyle? Can't trade 4, trade 1. 2 $50 trades per day at a single contract will make you $20,000 a year. You might be able to afford a few extra niceties. Maybe put money toward your kids' college fund. Maybe put money toward your retirement. You'd certainly be outperforming most of the money managers out there today. It's all in the volume. It's not in the frequency. Like I said, that's a concept that most people never wrap their heads around. If there's one thing that's probably holding you back as a trader, well, 2 things. It's all summed up in money management, though. It's overtrading. I can almost guarantee you are overtrading, and you are risking too much money per trade. You are risking more than you can afford to lose. Very, very important concepts. Oh, Julie's asking, what's the first micro-macro cross? That's a signal that we have on our Hawk scalper. Remember I showed you the cheat sheet? The first micro-macro cross is when the micro line, this is on our Hawk, this is unique to our Hawk, when our micro line crosses the macro line and everything comes in sync. The signal fires, we get green bars, green signal, green trend line, green filter, everything is in sync. Very high probability signal. Next strongest signal is the macro line pullback signal, and that's when the market comes back to the macro line. That's this thick one. The micro line changes color. That's the tip-off that it's a macro pullback signal. Very high probability signal. Then we also have our 4-arrow consolidation, another high probability signal. So if you concentrate, just on those signals right there, just on your Hawk, never mind your Falcon, your Eagle, and your Raptor, we have high probability signals for the other tools also. And for those of you trying to reverse engineer these tools, I'll tell you right now, you won't be able to do it because you only see a fraction of what's going on here. Yes, these are moving average lines, but they're specifically designed for this tool to pick up scalping possibilities. And there's about 6 variables that need to be met before this will actually ever print a signal. And some of those are price related, some of those are momentum related. I've had people ask me about that before, about, aren't you worried that people will try to reverse engineer these things? No, because I know you can't do it. Oh no, I know, Julie. Julie says you're just asking what they are. That's fine. No, that's fine. You know what, Julie? There were about 4 different hands involved in developing these tools. Everybody got to do their own tweaking on them. I think only the programmer really knows everything that's involved in the signal generation. I know what I contributed to it. I contributed certain price characteristics that the indicator actually looks for. Pricing requirements that have to be met. And certain momentum requirements also. Yeah, see, and Lee brings up a good point too. I've experienced too many trades and the cost of trading gets hefty each round turn. That's true too. You know, between the broker loves it when you trade a lot, obviously. You're going to get yourself a really nice Christmas card from your broker. But yes, it does add up a lot. Yeah, okay. Dustin says, these are the kind of days I was talking about. Yesterday, Dustin was saying, how do we know when we're in a sideways range? And how can I avoid it? I don't know I'm in the range until I've had a trade or two and take a full value stop or two. And yes, that is problematic. I know it is a problem, Dustin. Range trading is always an issue. And if you suspect that the market is range bound, so for instance, here was the daybreak line. And how do I know the market's been range bound? Well, when this is what I see in the overnight. You know, the market's very, very quiet. This is all I have in the overnight. And then the market opens and it's equally as quiet. Tom asked, do I trade the first hour of trading? I usually try to avoid the first half hour. If it wasn't for the trading room, I usually get to my trading at around 7 a.m., which is 10 a.m. Eastern. I usually let the dust settle. Now, there have been some very pronounced moves out of the open. Not so much lately, but, you know, that's a risk I'm willing to take, that sometimes I'm just going to avoid that certainly the first 15 minutes. I've noticed over the years that sometimes at quarter to the hour, I get a real tempting looking signal that doesn't end up going anywhere. So I suppose, Dustin, what I might recommend is that during that first half hour or hour of trading, maybe go in a little lighter. You know, if you see a promising signal, like here we have the Raptor, and let's dial this back, and we're a few minutes into trading, and I admit, I think I even was looking at this. Oh, we did this on the E-mini, I think. We had a comparable signal on the E-mini, where it looks as though the market is going to break the trend line. It has broken the trend line. Or here, let's dial this back. So this is looking like a fairly tempting trade, but it's early, right? It's looking like the market is turning over. Let's say you chose to take that. Just go in with a onesie. You know, go in with a onesie, risk it as far back as you can. See, the problem I have with this, of course, is that we haven't seen the test of the extreme. And I think I may have mentioned that when we opened the session this morning, is that we don't have this part of our trade yet. That would be another reason I would be a little bit hesitant about taking this trade. Had I seen a test of the extreme up here, That would give me much more confidence in selling this signal as it printed down here. So then when you get in and the market starts reversing, let's say your stop was here. When you start getting these bars with these tails, or pardon me, these wicks on them, that's when you want to try to get more aggressive with your stop, because you know this is the last chance the sellers have to regain the market. So what you could do is you could be more aggressive on your stop, especially if the market prints a wick, so that if it does reverse again, at least you've minimized your loss, or maybe even managed to get the trade to break even. So I think that's what I might suggest. That's not so much worrying about filtering out the signal as maybe how you're managing the trade until the market actually shows that it's got a little momentum behind it. And yes, there will be times when you're going to guess wrong. You know, you're going to see something like this, and you're going to take this signal, and maybe you're going to be on the cautious side, and you're only going to go in with a onesie, and the market's going to go and go and go, and you're going to say, oh, darn it, why didn't I take an extra one? But this is the time you go back into the history, into your journal, and you look at this and you say, okay, what did I miss here? Why didn't I see this coming? Oh, I see. Okay, this one had a proper test of the extreme. I could have more confidence buying that signal, or even buying this signal here, as a matter of fact. Right? So these are the kinds of things that you're going to pick up on. But that might be my suggestion to you. Not so much avoid the signal entirely, but maybe just, you know, try to keep your stop as far back as you can and be a little bit more aggressive with your management once the market shows you what's going on. So I have a feeling you probably took this trend change signal right here, which, you know, was a valid signal. And the stupid part about this is like the trade I took in the Falcon, where this signal would have worked depending where your stop was placed, right? If you had your stop right here, well, you didn't have a chance. If you had your stop right here, which seems like a reasonable spot, the market just drifted too low before reversing, right? So that was just bad luck. If you had your stop down here, well, you would have made money, right? So try to keep your stops as far back as possible. And this is a situation too where when the market shows you the swing, and it will show you a swing. How do I know that? Well, let's look at what's going on here. Market has made a major move to the downside. Itty bitty move to the upside. Do you honestly think that the sellers who have made this move are going to walk away from the market because the buyers have made this move? You think the sellers are running scared saying, oh no, here come the buyers, watch out, run away, run away? I know that's a bad voice. No, of course not. It took a lot of effort to drive the market down like this. Are you kidding me? The NASDAQ has been in a huge rally. Well, okay, not so much yesterday. But overall, right, the NASDAQ has been in a huge rally to the upside. Just look at your daily chart. And the sellers managed to knock it down like this. You think the sellers are going to walk away because the buyers come in like this? No. So I know there is going to be another move lower. There has to be. So here's my buy signal. Okay. So I want to keep my stops as far back as possible. So at the very least, let's say I'm going with my ATR, and I'm going to run my ATR at 3. I prefer 3 to the 2.618 default, just because it gives me a little bit more wiggle room. Doesn't usually cost me that much more, and very often will make the difference between a winning trade and a losing trade. If you don't like that, you can go with percentage, which is a little deeper still. Gives you a little bit more staying power. And I'm only looking for initial staying power. This is very similar to parabolics, where if I had, actually the parabolics are a little bit tight here. Normally parabolics hold off at the beginning of a trend, right? Parabolics stay very deep until the trend starts to pick up momentum, and then the parabolics come in tighter. And sometimes they'll come in a little bit too tight. Chandelier is another one that's good for holding you back. You can see the chandelier is pretty much down here with the percentage. But let's say we're going to go with a 3-period ATR. So we're going to run our stop right here. Okay, I get filled. All right. Sellers start to push back. Am I surprised? No, not really. The big question now is how deep are they going to push? All right, here come the buyers. That's good. That looks good. Hooray. Uh-oh, here come the sellers again. Sellers are pushing harder, pushing harder. All right, so now my trade is, and I would encourage you to actually hold your stop, not let it roll. Hold your stop until you see the buyers come back. Somewhere through here, the buyers have to come back. And it's the same kind of principle. The buyers, it took some effort for the buyers to rally the market from on this leg here. The sellers just have a little momentum now. Are the buyers going to walk away entirely? No, they're going to push somewhere. Is it going to be a big push or a little push? That we don't know. But I want to see that swing. Okay, so here is the swing. This tells me now I can roll my stop right here. And if I'm nervous about the trade, I might even choose to start rolling it bar for bar until I get perhaps a little bit more comfortable with my risk position. But there's nothing wrong with forcing the market, with making the buyers prove themselves. So roll bar for bar. Okay, now I'm at pretty darn close to break even. And now I can just let the trade go. Okay, I get stopped at break even. Or if they very likely hit my profit objective somewhere up here, we're looking for 2.5 points. Yeah, they would have hit my profit target before they took me out at break even. So again, big initial risk, yes, but you almost need it in order to ride out the swing. Right? Like I said earlier, there's only one thing worse to me than a losing trade, and that's a losing trade that would have been a winning trade had I not had my stop so tight. So I hope that helps you a little bit, Dustin. I know it's a little bit of a nail biter, but go in, light, go in with a onesie, allow yourself a reasonable risk amount, and position your stops based on what you see on the chart, not based on the dollar amount. And if the stop is so deep that you can't afford it, then maybe you have to forego that particular signal. Lee is asking, can I recommend a simple book on probabilities? I should write one, but no, I'm sorry, I don't. I took my probabilities and statistics course in university, and those books are dry as anything. But the internet is such a vast resource. I bet you if you type that in, you'd probably find more information than you could handle. Lee is asking, do I ever look at gold in the trade room? Sometimes. Not very often, but sometimes. We can throw gold up here before we leave today. Let's see what's going on in the gold market. Yeah, Dustin says, I got spanked on the same one you did. Sorry, man. Bryce says, I thought there was a limit on how many contracts someone can purchase at one time. No, not really. you don't normally go in, you wouldn't go into the market like the NQ with 25 contracts because the NQ wouldn't absorb 25 contracts without considerable slippage. So if you're trading that kind of volume where you can trade 25, or I know guys who can trade 100 contracts, they don't trade the NQ. They'll trade the big Dow, they'll trade the big S&P, they'll trade, well, sometimes the mini S&P. The mini S&P will absorb 25 contracts in the blink of an eye. And it can even swallow up 100 contracts without too much trouble. But if you're trading that kind of volume, yeah, you're trading a much larger instrument than the NASDAQ or the mini Dow, because you'll just cause too much slippage. A market like crude oil, shoot, 25 contracts or even 100 contracts, it doesn't even flinch. No, you can buy all you can afford. And thanks to margin, you can even buy more than you can afford. All right, let's take a look at, oh, fantastic news. Way to go, Dustin. You're getting your trading chops all right. Dustin says, I got hit for an $800 loss, but made it up on 3 different trades, and now I'm sitting $300 to the good. Good job, man. All right, before we close up the room today, let's take a look at what's been going on in the gold market. And gold, well, you know, gold is a good all-round market. Regardless of what time zone you're in, you can almost always find a gold trade. If you're one of these people who is busy during the day, aka has a job, gold market's a great one to trade after hours. Look at these moves that come during the Asian session. Just fantastic moves in gold. Here, just going through our hawk signals, we had a first micro-macro cross early on. This was at the end of yesterday. I should go to today's session. So start our time, which would be around 6:30, we had a a macro pullback signal. You can't see it, but the micro line went out of sync just for a bar, just enough to give us our macro pullback signal. And then we built into a 3-arrow consolidation, not 4, and that's because markets like crude oil and gold tend to move a little bit faster. You'll get a 3-arrow consolidation instead of a 4. And the telltale sign, or what I usually like to see this formation develop as, is like a bear flag, or of course in the uptrending market, it will look more like a bull flag. And what will happen is we'll get 3 arrows printing, and then that 3rd arrow we would enter our trade on. So here was a 3-arrow consolidation to the downside. Oh, this is unusual. This does not happen much. I think we're going to see a rally in gold if this signal fails. This is a first micro-macro cross again to the downside. And again, this is one of these situations where depending where we place our stop, we may or may not have been stopped out of this trade. I normally like to go for the swings, right? The swings or even the macro line. If I see a bend in the macro line, that's a good spot. If those of you who are trading moving average lines, watch for that bend in your moving average line. That's a great place to place your stop loss order. So the signal hasn't failed yet, but if this first micro-macro cross signal does fail, in other words, if we trade high enough to trade above these highs, there's a very good chance this market will reverse and head the other way. That's how strong that first micro-macro cross signal can be. Okay, let's take a look here on the Falcon. Pretty quiet day for gold in the Falcon, really. Some early morning stuff. We had a trendline touch signal here, which gave us a little bit of heat, but eventually tailed off. And here is the eagle. Nice little test of the extreme up here. Gives us a little bit more confidence in the sell signal. We're just about to print our first sell signal. These were all counter trend. It looks like we might be working on a sell signal in in gold. And let's take a look at the Raptor. The Raptor 2, the band has just flipped over. That gives us our directional bias. And we would be waiting for a possible sell signal here. The Raptor also showing us our test of the extreme. So that shows us that the buyers have temporarily lost control of the market. We've broken down, and with this breakdown, we can expect at least 2 moves in the direction of the breakout. So here's move number 1. We're working on move number 2 now. So I would not be surprised to see gold perhaps move a little bit lower. All right, you guys, if anybody has any other questions, please type away. Otherwise, we're going to close up the room. And once again, if you want more information about the software or any of the other indicators and tools that you saw here this morning, like our trade forecaster or the ultimate support and resistance lines, I didn't touch on the day ranger today, but we have this day ranger tool which tracks the daily range relative to the 30-day average. You can go to that link and find out all about those also. All right, DTS owners, I will see you in the trading room tomorrow morning. And for the rest of you, thank you very much for your time and your attendance and your questions. It's always more fun when people are asking questions. If you're trading this afternoon, oh boy, what a dog's breakfast. Crude oil putting in a little bit of a rally still, but I think we've seen crude do all it's going to do today, so I don't think I'd be trading crude in the afternoon. The stock indices, well, they're bound and bent. They're going to go higher. The NASDAQ's up against some pretty significant support at 44.50. The E-mini might have a little bit of wiggle room still to the upside, but I think we need to be a little bit cautious. I think the market is getting a little bit heavy and yearning for a retracement. All right, you guys, thanks again. We'll catch you next time. Bye for now.